Hello guys, welcome all. I'm your host CPA Deco Mohammed. Today focus is the income statement for beginners. We want to discuss how to prepare the income statement for the beginners. Uh, I've seen so many requests from people who are not in finance background or accounting, and they want step-by-step guidelines on how they can go about the income statement. There are several videos I have prepared on the advanced income statement. You can check them out. But for this, we'll delve into the income statement for beginners. So say that we can have here, you have a gross sales, like we are selling five shirts, each at 5,000. If you sell five shirts at 5,000, that will be 25,000 as your sales. Maybe there's one shirt that is returned. So the sales we have made is 25,000, but one customer has returned one shirt. If there's one shirt returned, we multiply with 5,000, that comes to 5,000. Now, for us to get the net sale, we subtract the sales from the sale return. We also call it return inward. So our net sale will be 25,000, subtract 5,000. That is 20,000. We are dealing with, you are a person of business dealing with shirts. You sold five shirts, each at 5,000. 5,000 multiplied by 5 would be 25,000. Now, that was the sales that you have made. Out of that 25,000, one customer has returned one shirt. So if I return one shirt, my sales will not be the same. I have to subtract that shirt has been returned because you are going to refund that money to the customer. So you have to subtract that one shirt that has been returned so that when you subtract that from the sales, then you have the net sale. So if I sold five shirts at 1,000, sorry, five shirts at 5,000, that is 25,000 as my sales. Now I have to subtract the 5,000 for that I get 20,000, which will be my net sale. So for our case will be 25,000, subtract 5,000, which comes to 20,000. Now sale return is also called return inward. Now the next step is to get the cost of sales. We already have the net sales. We are going to compare the net sale against the cost of sales. If the net sale is higher than the cost of sales, then that will be our gross profit. But if our cost of sales is higher than the net sale, then that is a loss. Now, the step two is to prepare the cost of sales. And how do we prepare the cost of sales? Cost of sales, we take the opening stock, you add the purchase, you add the carriage inward, then subtract closing stocks. Sometimes the equation might not have carriage inward. So there is nothing wrong with that question if it is lacking the carriage inward. Even sometimes, sorry, here we also need to less the, we are supposed to less here also the return outward. Before we less the closing stock, we need to subtract the return outward if it was there. If we have purchase return, you have to subtract it also from the purchase. So we'll have the opening stock, you add purchase, you add carriage inward, you subtract the return outward, you also subtract the closing stock. Now, let's say our stock is 8,000. That is our opening stock. If our opening stock is 8,000, then we have some purchases. If we have four shirts, each at 3,000, that will be 12,000. If you purchased four shirts at 3,000, then that is 12,000. Now, maybe you want to transport your shirts from where you buy your clothes to your place of business. Now you need that transport. That transport cost is also called the carriage inward. Now you have to add to that purchase because it is part of that. It's going to add our expenses. So carriage inward is the transport cost that it should be added on top of the purchase. So sometimes the question might not have the carriage inward, and there's no problem. Maybe someone has not used any transportation to transport his goods. So we have to add the carriage inward. If our purchase was 12,000, we need to add 500 so that we'll have 12,000 plus 500, we get 20,000. Here we have the stock as 8,000. You add the purchase of 12,000, that will be 20,000. Then 20,000, you add 500, that will be 2,500. Sorry, this is not 12. Before 12, you need to add the 8,000 plus 12,000 plus 500. We are going to do an illustration at the end. You don't mind this. There's a mistake here because I have not added the 8,000, but I'm going to show the final illustrations. Now, 2,500 was our cost of good available for sale. Now we need to less the return outward or the purchase return if it was there. For this case, we have two shirts that have been returned, each at 3,000. So this will be less. We need to subtract that from the purchase, and we also need to less the closing stock so that we get the cost of sales. Now, from this cost of sales, we compare this with our net sales. Now, our gross sales was 20,000. We less the cost of sales, which is 11,500. Now we'll have a gross profit of 8,500. Now, after we get the gross profit, we need to add if there's any other income. For this case, you have discount received as 3,000. Now you need to add that 3,000 to 8,500. You get 11,500 as our total income. Once you have the gross profit, you look for other incomes. Normally, all the incomes have a credit balance. In that ledger, you look at the credit side where incomes have that credit balance, but expenses have a debit balance. Now, from step 5, we go to step 6, whereby we are going to less the expenses. Now, if we have rent as 2,000, electricity 1,000, carriage outward 500. Now, that makes our total expenses as 3,500. Now, this 3,500, we need to less it from. We need to less from the total income so that we get a net profit if it is higher. For this case, the total income was 11,500. Then we subtract the total expenses, 3,500. We get a net profit of 8,000. Now, this is the illustration I was talking about. Now we have the gross sale as 25,000. We also need to less the sale return or the return inward, 5,000. We get the net sale as 20,000. Now, from this, you go to the less the cost of goods sold. How do you get the cost of goods sold or the cost of sales? We start with the opening stock, which is 8,000. You add the purchase, 12,000. We add carriage inward, 500. Then we less the purchase return, which is 6,000. Now that comes to 14,500. Our cost of good available for sale now comes to 14,500. From that, we are going to less the closing stock of 3,000. Then we get the cost of sales as 11,500. Now, we already have the cost of sale as 11,500. And remember, our net sale was 20,000. Now we less that net sale of 20,000 from this cost of sale as 11,500. We are going to get a gross profit of 8,500. Now, from this gross profit of 8,500, we're going to add the other incomes. We only have one income, which is the discount received of 3,000. That will get us the total income as 11,500. Now we are going to less the expenses, which we have rent, 2,000. We're also going to less electricity, 1,000. Carriage outward, 500. Now we'll have the total expenses as that 500. Now we less that from the total income, we get a net profit of 8,000. So that was the brief illustration for the beginners for the income statement. I'll also have a specific classes for those advanced, whereby there are some I've already tackled, like incomplete, how do you prepare income statement for the incomplete? Because there are some business that don't have complete records. So how do you prepare income statement in an incomplete records, whereby you need to prepare the debtors account, the creditors account. You see, there are a lot of process involved in that. I've already prepared one class for that, and I will also make some other classes for those advanced income statement. Also, the income statement for companies, partnership, sole proprietors, and we also have the non-profit organizations. All of those, some have done, and still I also do other classes so that you may understand very well. That was the brief class. It is me, CPA Leko Mohammed. I'm glad to have hosted you. Please subscribe to the channel and also click on the notification bell so that you don't miss any time I post a video. Thank you.